Thank you for tuning in to another edition of the Vulcan Report. This report is recorded for trading on Monday, November the 18th. Taking a look at Friday's trading action in the E-mini S&P 500 futures contract. As you can see, we are now officially in an overbought status here in this market. We have extended gains from the last overbought, which was in October the 16th, and you see we extended for several more bars. Then, as if the market wanted to pull back but didn't, it continued to go even higher until we got this black bar here. Then we tried to correct, only to shoot up again, failed double top here, but instead of really collapsing again, just looked like it wanted to go up. Then we shot up to new highs again. So it's been a very difficult market in that regard. But you can see we're locked in on the bullish strength here. Okay, we're locked in for a while. We came off of being locked in. We got a down bar here, only to relock in again on the following day, then lose that lock and take out the support. Do that for 2 days, and then we finally relock back in again. So, excuse me, you can see how and where we are now currently within this bullish market. We have relocked in for the last several trading days. So there is much strength and power in this market. Every corrective trading day seems to be bought back the following day. And so when you have a market that's like this, a lot of people can get caught up and put in the washing machine, so to speak. And that's what usually happens in markets like this. You get put into the washing machine. And there's not a whole lot you can do about it. I mean, it is what it is. You just have to use your, some good stops, some tight stops, and be prepared to stop and reverse, because you just never know what's going to happen in these markets. So let's take a look at what happened on Friday. Had you taken the prior day's trading signal, long signal here to get long at 1789.5, with your stop at 1783 even, you would have realized 1796 high. So you could have made a nice little gain there, and you would still either be long the market, or you would have tightened up your stop. The stop is tight for Monday. Alright, you're going to look to, if you're still holding a long position in the S&P, you're going to put that stop at 1791.25. Alright, and you will look to get short at 1791.25 if that is triggered. So that's the short trigger for trading on Monday. The buy trigger for trading on Monday is 1796.5. And that's what we have for the S&P 500. Okay. I do not really see anything really significantly happening to the downside. But remember, we trade both sides of the market, because you never know what can happen. It's always a good rule of thumb to trade with stop and reverses, because sometimes you catch powerful moves counter trend. All right. So we don't care as far as market direction. We know intraday, it doesn't matter. Things can happen intraday. You can get a bar like this on an intraday basis, okay? We have 30 points in the market, only for the next day for the market to catapult right back up again. You see what I'm saying? So that's why we trade this way. It's a good rule of thumb to get used to trading this way, okay? So had you been prepared on November the 7th, on the close of November the 7th, you would have been prepared for that corrective move on November the 8th. Does that make sense? Okay. So you would have caught a few points on the continuation at 1740.75. The low was 1736.5. Okay. So once again, you could have caught a few points here. Had you gotten caught up, it doesn't matter. You would have been stop and reversed out and caught long and made back your money the following day easily. All right, so that's why we do what we do. All right, let's take a look at what's happening now in the NASDAQ for comparison. Okay, taking a look at the NASDAQ, we see a little bit differently here. We do not have locked in bullish momentum in this market the way we do in the S&P. We did lock in on Thursday. We re-locked in. So we're now 2 trading sessions in to relocking in the bullish pattern here. And we do have positive swing VIX. We have a positive trend channel here, okay? This trend channel is nice and steadily moving upward. Still has a way to go yet to catch up to the price action. But we are concerned with the swing VIX topping out up here, okay? This is cause for concern just right here. As you can see, we're right there now. We're right there. We are right at the topping out on this market where the swing VIX went. Okay? This is cause for concern in the NASDAQ. We'll have to see what happens on Monday. So for Monday's trading, we're looking to get long at 34.22 even, short at 34.13 and a quarter. So another market with a tight trading range on an intraday level. But once again, we're encouraged. We do that because we know that the market can pretty much do anything it wants, and we really have no way of knowing which way it wants to go. Okay. Okay, taking a look here at the crude oil futures chart. We switched over now. I believe where the front month is February of 2014, I believe. So here's where we are. As of Friday's close, we have a positive trend channel here now. All right, positive swing VIX, and it's looking as if we could continue to retrace up toward back toward the 101 level. Remains to be seen. We're coming off of a locked in downtrend. It looks like we've stopped that now, as you can see. All right, so Monday's trading is going to be very interesting to see for sure. All right, so what do we do? All right, we're long at the 95.16 level and short at the 92.41 level. So again, very very wide range on this one. Okay, I don't see any downside coming on Monday. I see mostly upside, but that remains to be seen. Okay, here looking at the gold chart. As you can see, we are still locked in this bear trend to the downside, but we have a positive trend channel developing, and it's going to remain to be seen what happens here. Prices is moving with it, so we could see continued retracement at least to the bottom side here of the Kumo cloud around the 1310 level. We'll have to hold on and see, but because we have been locked in for so long, and we did have these black bars here, I don't think we're done going down yet. Let me just show you what I mean. Even though we came off of a lock-in on Friday, see, Monday should be the beginning of a decision. So let me just go back a little bit. You see here we came back down. We had these red alert black candles here. Okay, we retraced, came back down, tested the support, tried to rally again, failed. Okay, lower high. Then we took out the support, the prior support, took it out. Right, sideways, new lows. Okay, that's what I'm saying is developing here. So if we have more of these little black candle things here, so I see this support coming out, and I see us possibly getting down to where the swing VIX is at the 1180 level. See this 1180? All right, that's where I see it going. Let's go back, look at something else here. Alright, last time we had several of these, it formed a nice base of support. Market retraced heavily. Another black candle, new supports. More rallies, caution, red alert candle. Not long afterwards, another red alert candle, and this time new lows. So that's the evidence we have on these black candles, which signify major crash and rally alerts, warnings in these markets. Okay, so with that being said, for Monday's trading in the gold, extremely tight trading range. Short at 1285.10, long at 1291.30. Alright, our last chart is silver, poor man's gold. Alright, as you can see, this 1950 is showing where the swing VIX has been hanging out. And we got this last red alert bar on November the 13th. And again on November the 7th. We've been crashing since November the 7th to new lows, as I have warned in several videos from that point. And we did put in the new lows, but again, we are still locked in on this downtrend. Alright, and we still in a bear market. Strong selling pressure. Swing VIX is hanging out between $19.50 and $20 even, and this goes back as far as September the 17th. Okay, and even going back as far as June. So we've been signaling that the June lows of 1833 is bound to be tested. Hopefully it will hold for those who are silver bugs. If not, I think we all know that we're going to be going back down toward $8 to $5. No one wants to see that except for those who want to accumulate, but as you know, the cheaper silver gets, the harder it is to accumulate. Right now, paper is stronger than precious metals because of all the money printing and all of the stimulus and all the stuff going on at the Federal Reserve. People are seeing less and less reason to purchase the metals. They're making more money in equities than they are in metals. Now, there is some understanding that needs to be made here. I speak purely from a trading standpoint. I know that a lot of you gold and silver bugs like to differentiate between paper markets and physical markets. Just understand that these physical commodity markets that are traded with paper set the price when you go to sell your gold and your silver at these gold and silver trading places like APMEX and other places like that. Understand, they're taking their cues from the spot and futures markets, and then they add their markups to that. So a lot of you, I know you like to argue back and forth. Oh, well, are you talking about physical markets or are you talking about paper markets? Okay, it's one and the same. The physical metal takes its cues excuse me, from the spot price market and the futures markets. Alright, understand that. That's how it is. That's how the dealers, when you go to sell, if you want to sell some silver or you want to buy some silver, buy some gold from places online like APMEX and all these other exchanges, understand they're getting their prices from this futures market. Okay, so let's put that out right now. I'm talking about trading at the COMEX. All right, trading futures contracts. These videos are for futures trading futures, or how you want to say it, paper markets. But understand, these paper markets set the price for your physical when you go to buy and sell at these exchanges, or you go to a dealer or a place that says we buy gold or we buy silver or whatever. Understand that's where they're taking their cues from. These videos right here where I'm showing you in these charts at the COMEX, this is where it all comes down. Okay, so this affects you if you're a holder of silver. I know the argument, oh well, no, but we don't do it like that. This is an asset and blah blah blah. I understand all that. But as of right now, at the time of this video, if you want to go to liquidate your physical holdings, this is the price you're going to get for it. minus the fees and the things they take off the top when you go to do it. So you're going to get a little bit less than that. So, for example, silver closed around $20.77 on Friday. If you were to go and sell some of your physical silver, you'll be lucky to get, hey, maybe the 1950 for it. You know what I mean? If you go to sell it. However, if you want to buy it, then they're going to charge you. Okay, if we close at $20.77, you'll be lucky if you can get it for $23 or $24. All right, that's the markup they hit you with. And the more scarce the physical becomes, the higher those markups are going to be. All right, it's not going to be rare to see $5 and $10 markups on your physical silver purchases. All right, so the percentages can be jacked up high, even for gold. I don't care. Gold trading at $12.85 on the exchange. A dealer still may charge you $1,300 to buy an ounce. All right, they have markup. That's just how it's going to be. The harder the more rare this becomes, the more these big outfits like J.P. Morgan and stuff buy up the physical from you guys, the higher the markups are going to be. I don't care if gold drops back down to $200-300 an ounce. Good luck trying to get it at that price. They still may charge you $1,000 an ounce to get that gold, even if it's trading at $300 an ounce, because that's how hard it is to get. I know it sounds absurd and ridiculous, but mark my words, as things start to heat up here in the economy, as far as this global depression accelerates, you're going to start seeing outrageous things like that. All right? Or altogether them telling you we don't have any physical silver or gold to locate. Sorry, you can't buy any for any price. We don't have any. We can't find any. All right? It may come down to that as well, too. So anyway, just wanted to give you the heads up on that to explain what we mean and what we're talking about in these videos, okay? All right, so for Monday's trading, short at 2068, long at 2083. Extremely tight trading range, but what are you going to do? If you get stopped out on both ends, you simply chill and wait for the next day, see what prices settle at. That's how it goes. Yeah, you get stopped out a lot when the volatility really slows down and the range is narrow, but like I said, it is what it is. What are you going to do? You have to trade these markets, and you can't make money if you're not in. If you don't have tickets working, you'll never catch any breakout or breakdowns. That's just how it is. So you got to man up, put your tickets in, and let the chips fall where they may. All right? So with that said, be encouraged. Remember, take what you can and give nothing back.